Late night, they ain't getting no rest. Work so hard, people think I'm obsessed. Cream at the crop, won't settle for no less. Headed to the top, remaining so focused. Yeah, gorilla of the jungle, I've been beating on my chest. I learned from the struggle, it was hard, just a test.
Hey guys, and welcome back. So today we're going to jump back into the macro side of things again. We'll take a look at all our normal charts as well as finish up on Bitcoin and crypto briefly. But I just kind of want to talk about what happened this week, get a little bit of a recap, so then we can, when we start looking at our charts, we can kind of see why price is doing what it's doing and then go from there. So basically what we saw at the beginning of the week, or during the weekend, we had the announcement of all the reciprocal tariffs. So it was essentially sweeping tariffs for almost every country out there that trades with the US and has a trade deficit. So we saw 25% on Canada, Mexico, we saw crazy tariffs on China, we've seen just all across the board. So we've had a lot of mixed reactions kind of from the different entities that are involved in this ongoing negotiation as well as escalations, and could result in this potential further escalation of a trade war. But we've kind of seen mixed results. We've seen some countries willing to negotiate, and then we've seen others kind of hitting back, China especially. So right now we're kind of in this tit for tat scenario with the US and China. Right now I think the US has about 134% tariffs on Chinese imports. China has answered by putting 120% tariffs on US imports. Also, we have noticed the Chinese government did inject about 800 billion won into the economy last week to try and help with the volatility. So we saw some relief in Chinese stocks. We did open a position on Baba, which is a Chinese stock as well. So that's another thing to pay attention to going forward. But same thing that we have in the back of our mind, nothing's really changed. There's still this ongoing volatility, uncertainty. We hopefully they can come to a bit of an agreement. We see Trump and Xi both kind of signaling that they want to talk, they want to negotiate. That being said, I think their demands for on both sides are a little bit unreasonable. They both need to compromise, but it seems like one of them just wants to get the other to compromise without them doing it themselves. So we'll see what happens going forward. As for now, just continued increases in volatility. It seems we can't go a single day without kind of more tariff fears kind of coming about. No matter what, even though we're having countries willing to negotiate with the US, then just having China, this huge economy, major manufacturer, major world exporter, to have them fighting and just committed to fight to the end, it's just not good for the markets. So it's kind of interesting. It could push us into a recession. That being said, I have talked about a recession. I won't get too far into it today because the way we treat recessions as an investor versus a consumer is a little bit different. As an investor, by the time that everyone has kind of admitted to the fact that we're in a recession, for the most part, we've already felt the majority of the downside, in which case recessions offer really good accumulation opportunities in long-term core conviction assets like our stock market indexes, or some of these other tech stocks that their valuations have just run to crazy numbers. It's finally coming back to reality, offering us that kind of opportunity to enter at a better valuation, a little bit less risk. So the way we treat it as an investor, as soon as everyone admits and kind of concedes to the fact that we're in a recession, that's not the time to be scared or be fearful. Generally, we're probably going to have the bottom in the market either around then or pretty close. So we will just continue following that. We've already gone down 22% from the highs of the stock market. We did buy into that dip there when we reached our targeted level, and we're sitting nicely in profits on those buys. We've got our Baba position. We've also been taking swing trades in Bitcoin. So despite the volatility, despite the choppy price action, the downwards price action, we're still coming out profitable. We're still mitigating that risk, and we're still building that cash position to be able to take advantage of those recessionary opportunities to accumulate substantial amounts of these stocks or of these indexes at a relatively cheap price, or what we call kind of a generational buying opportunity. So it might only come by once every decade. So you had the dot-com, you had great financial crisis, you had the COVID crash, and now we've got this drop here. So it could get worse. That being said, I'm just looking to take further advantage. The lower we go here, this is one of those opportunities for me as an investor, especially as a young guy. You want to take advantage of these substantial retracements because that's what's really going to increase your buying power when you're going into the market. it, and it's what's going to increase your overall profitability in the long term. So we're just going to continue going on. We basically saw, so stock market's just crashing at the beginning of the week, and then he came out so this is the funny thing. At first there was a fake news article saying that they were going to put a 90-day pause on the tariffs, which Trump said was false. So we saw the markets recover, and then as soon as he said it was false, the markets dumped, and then the next day he goes and he puts in a 90-day tariff pause, the same thing that he just said was not true. And then we see the markets ripping to the upside. We see him bragging about the different insiders. He was telling his friends, this guy made $2.5 million today, this guy made $900 million today. I'm sure it's all fun and games when you're in the insider circle and you know exactly when to buy, but that being said, we can't predict those events, so we just have to take it with a grain of salt. But we'll just go back here. So we pretty much see sorry, excuse me. So we saw that pause, we saw the relief in markets, but that same being said, we weren't able to actually sustain that bounce. So we did dump about 5-6% after that bounce because of the continued escalations with China. So it didn't resolve everything. I think what they wanted was to see the US 10-year yield come down. That hasn't been the case. It's remained elevated, which is a warning signal. So obviously whatever they're doing is not working. The US 10-year remains relatively strong, or very strong actually. So what we need to watch in the near term, we need to get more clarity around trade policy. So in the next 1 to 3 months, we're really going to be following these negotiations around these tariffs. We want to see continued de-escalation. Ideally, we need to see what the Federal Reserve is going to do in the next kind of 3 to 6 months. I'm anticipating 1 rate cut this year, just based on the economic numbers that we're getting. If we get more kind of pressure on the stock market, on the economy, maybe unemployment starts ticking up, then we might see another maybe 2 rate cuts, maybe a little bit more. That being said, I don't think we're in the territory for emergency rate cuts yet. We had emergency rate cuts in prior financial crises, but there was also more underlying weakness in terms of unemployment, in terms of credit, in terms of other markets collapsing. So for now, I don't think the Fed cares that the stock market is down 15% when unemployment remains pretty good. Inflation's coming down, although he does recognize some inherent fears of rising inflation due to the tariffs. So again, that's something we have to just follow along. That data is going to be lagging, so we're going to have to kind of digest it as it comes. We see that crypto regulation is getting kind of further away from kind of the regulation. So we see a lot of the different, the SEC dropping a lot of court cases, kind of disbanding the different justice departments focused on Bitcoin and crypto. That being said, I don't know how bullish that actually is. I do want that regulation in Bitcoin and crypto to protect the investors. It shouldn't just be the Wild West, because then you get people, you get presidents launching meme coins and then awarding their insiders and dumping on all the people, all the citizens that they're supposed to protect. So there's kind of that conflict of interest. I'd like to prevent that going forward. And then we've also got global macro risks going forward. So this is all around the geopolitical tensions. This is purely speculation, but we essentially, if we see a trade war between the U.S. and China, China is not going to want the U.S. to have an advantage in terms of AI or technology. Taiwan is a major manufacturer of semiconductors and a major exporter of semiconductors. So if we do see continued escalation in terms of a trade war, we could actually see that stem to more of a geopolitical risk where China is kind of incentivized to push a little bit further towards Taiwan. Of course, I'm not a geopolitical expert. This is all just speculation. It's just things we need to be aware of, because if it does play out, it's going to affect the markets. But at the end of the day, the charts is what we look for. The charts tell us when to enter, when to exit. So we're aware of everything going on. We're just seeing how it affects the markets, and then we're going from there. So we're going to flip over to our chart here, to the SPY. So I'll just move this over for you. So, excuse me. Basically what we see here, we've got our S&P. So I have it dated back to 2000. So what I want to show you here is just this new, it's not an indicator, but it is an index that we can compare it to. So I did, it is here, this MMFI. So when we go up here and we hit this compare button, and then we can do MMFI, this is the percent of stocks above the 50-day moving average. So if you've watched this channel, you know that I talk a lot about the 50-day moving average. The 50-day and the 200-day are are my macro uptrend or downtrend moving averages. So it's a bullish sign for stocks to be above their 50-day moving average, and it's kind of a bearish sign for them to be below their 50-day moving average. So this is kind of an example showing you basically a dollar cost average strategy based on this kind of a metric here, this MMFI. So we see every single time that we've come to these historic lows in the MMFI. So I drew a line right here, and you can see we came close a lot of different times, but actually getting to that extension and below has only happened a handful of times throughout this market. And you can see every single one essentially coincided with a substantial market correction. So we saw a 51% correction here in kind of the 2000.com era. We saw 57-ish percent in the great financial crisis. 2012 had a little 18% drop here, a little 15% drop here, 20% in 2019, a 35% during COVID, and a 27% during 2021, 2022. We had a little 10% correction in here, and then we had a 22% correction currently from the high to the lows. So every single time that we've come down to this extension here on this metric and broken below, that's essentially coincided with a major correction in the stock market. So that obviously we kind of see it doesn't perfectly time the bottom. You can see right when we hit this level here, we still weren't right at the bottom. The bottom actually usually comes when this has bottomed and kind of started bouncing back up. So you can see the bottom where it actually occurs, we were already coming back up to that positive momentum. Same thing over here, the bottom here coming where we start bouncing up. Same thing here, and pretty much same thing across the board. So what we're looking for now that we have reached that extension of this level, while it is a decent buying opportunity in my opinion for dollar cost averaging, it might not be the absolute best because we're not sure if this is actually the bottom here or if we're going to keep bleeding lower and then we have other opportunities. If we bleed lower, I'm just taking advantage of those opportunities. A 20% discount, as I said, doesn't come by that often in the stock market, and you need to take advantage of it when it does. So we came here. We're going to look to see if this starts curling back up for that relief bounce, kind of show us that we're getting that momentum back to the upside, getting back above our 50-day moving average and able to continue that trend to the upside. But just ultimately recognizing we took an average of all these corrections and we got about minus 25%. So we did experience, right within that realm of possibility in terms of that retracement. It could get a lot worse. We're going to take a look at a couple other indicators here. So I'll pull up our momentum indicators on the monthly chart, and I want to show you here, just comparing it to some other instances. So looking here at some of the smaller retracements, just based on the technical setup, it's a little bit different. You can see the DMI is resembling these two times over here. So that was that 57% correction in the great financial crisis and that COVID correction here. So if we're going to see similar things play out, we've got that bearish cross on the monthly MACD, our histogram flipped red, we had our bearish cross on the RSI. So if we do see that continue to play out, it could materialize into a larger drop similar to what we saw during COVID or during the great financial crisis. So we need to continue watching that. We see our VIX here is still remaining elevated. Yeah, the VIX, that was one I told you, just watch it, be mindful. Staying above 30 for an extended amount of time is not ideal. That's that volatility I said that would come in, and then we obviously saw the stock market dumping since then. The dollar is pretty weak here. I did pull this bars pattern. It was just a little bit of speculation. So taking this pattern from this move here and then overlaying it on the current move, it kind of almost lines up pretty well apart from this little peak here, but that's just speculation. We see the dollar breaking below the level of support here, so kind of similar to over here. We came in, we tagged that first level, we got that other push up, we came back, we put in a lower high, we put in the lower low, so we lost our lows here, but we were able to reverse it to the upside. So we'll see what happens here. The dollar showing some weakness. That being said, we'd like to see more strength in our risk on assets. So usually when the dollar's down, we want to see the stock markets doing well. We don't see that. We see again, I've been talking about this lately, again, just keeps breaking out of this little trend line here. This Swiss franc. So the Swiss franc is really gaining strength on the US dollar. It's heading up towards those kind of all these highs up here. The Japanese yen also showing showing a little bit of strength on the dollar as well, so that trend continues. We see the Chinese stock market up a little bit, so maybe getting a little bit of relief from that injection of liquidity. This is what I want to talk about right now here, the US 10-year. So the whole goal of Trump essentially trying to crash markets, a lot of people were speculating, was to bring that 10-year down. It worked very briefly. You can see we dumped here, and then look at this massive pump up here in the 10-year, sending us back up almost near our highs. We're back above 4.5%, which is crazy, especially considering all the rate cuts. So obviously their little attempt to kind of bring that 10-year down and force the Fed to make a decision didn't work. We saw this is likely due to hedge funds having to cover positions and either de-risking, moving money out of the risk on assets. Basically, if we see such massive volatility and those hedge funds have all these over leveraged positions, they have to scramble to cover those positions. They need to sell assets, they need to de-risk. So we've seen the US 10-year continue to rise, the dollar is falling, stocks are falling, gold is pumping, silver's pumping. We see the Swiss franc, so we see alternate reserve currencies doing really well. That's not painting a very bullish sign in terms of the macro, in my opinion. It's kind of just further points to me that everyone is just so uncertain. We don't know what the next announcement's going to be, what the next thing is. Maybe they raise tariffs again. We've had China and the US both talking about delisting certain stocks on their exchanges. So nobody really knows the extent that this trade war could escalate to, and we need to be ready for that. But according to all this, we're just not really interested in kind of getting too aggressive in anything because the charts are not supporting it. Although we did get a beautiful bounce here and a nice little play, it's hard to say if that's actually going to hold or not. We can take a look at our hourly chart here for that momentum indicators. We can see we came in, we got rejected by this resistance here, so broke down, back tested, rejected, losing momentum on our MACD and our RSI, and the DMI is kind of that neutral-ish, if not slightly bearish leaning momentum. So on the low time frame, the SPY does not look very good. We're going to flip over to TLT here. So this is what I pointed out. We broke down here and we de-risked that position, and then now look, TLT is down 5-6% from there. So another good job. This is when they say technical analysis doesn't work. Like I said, a lot of the time it might not work, so they're not 100% of the time, but it gives us those signals. It lets us build a strategy based on something rather than on emotion. So I don't care if I'm not nailing the tops or the bottoms. If I'm securing profits, I'm de-risking when it makes sense, and then I'm ultimately just successful in the long term. We see gold here with this huge pump. So again, guys, I said don't fade gold. Gold's just been pumping. That being said, obviously you're not going to be buying into this chart. Like, you never look at a chart like this and think, yeah, I want to buy that. Like, definitely, eventually gold will find its top, but we need that uncertainty in the market to be gone. So we need more clarity. We need de-escalation on the macro front, and then maybe we'll see gold start to put in a top. Silver here, it did lose this trend line, deviating slightly, but we're back here. So again, my upside target remains at this zone here, similar to what we saw before. So potential for a move of silver up to there. We see oil's down just a little bit, flat on the day, kind of. Natural gas down a little bit. Copper is up. And yeah, so we're going to flip over to Bitcoin and crypto real quick. We'll take a look at just the major ones that the major indexes that kind of dictate what the market's doing. As I said, there's no real bottoms out there yet, no confirmation. So USDT dominance just continues in this uptrend, losing a little bit of momentum on the indicators here on the daily. So ideally, we do want to see this breaking down, but on the 4-hour it look like we are going to get another little push up. So continuing in this consolidation pattern, upwards trending. We'll see what happens. We see Bitcoin here at 81.8 or just under 82. So that was another swing trade that we had. I'll flip over here. We had this previous one that I was talking about open at 75.7. We got a nice 7.5 or 7.7% return. We returned back to 78.750. Entered the long, Had an initial TP of 85.3, but I have a trailing stop loss moved up. I took 75% profits off the table, so I have 25% of that position remaining. We've made 4% returns, so another, just adding that on, coming to a total of almost 40% returns during a downtrending or choppy market. So really good job there, and we see almost 80% win rate. So still focusing on that win rate, focusing on the opportunities that come up. Just because we're kind of sideways chopping doesn't mean there isn't opportunities there. You don't have to kind of enter in crazy amounts to be able to take advantage of these moves. We're just looking to build those positions, take the profits when they come, and then save those profits for when we dip in the other markets, and we can put that money back in. So Bitcoin basically just in this kind of sideways consolidation again. We'll take a look at the daily chart, see how our momentum indicators look. So it looks a little bit better on the daily, like we could get that little push up. So 4-hour daily looks all right. As long as these lows can hold, I think we just have the ability to go up a little bit more. That being said, there is this down sloping trend line right through here, so we need to watch that. The upside target for Bitcoin here is going to be around 85,000 or so. There's also that CME gap that I talked about. So if we hit 85,000, I'll take the rest of my profits off the table on this trade, and then I'll look for the next opportunity. Same thing, rinse and repeat. It's the exact same analysis that we use on the high time frame. We just use it on the lower time frame. So that's what I want to teach you guys. You don't have to be a genius. You don't have to be a financial advisor. You can just be any person who's interested in learning, who has a passion. You know, just spend the time learning these tools, learning these skills, practicing, and you can really use it to give yourself an advantage when it comes to your investments. You know, obviously I'm just an everyday guy. You know, I worked in the gold mining industry for about 8 years, and then so that's what I did before. You know, had the savings, wanted to look at ways at becoming financially free, so I looked into investing, and then obviously made all the mistakes that every retail investor makes. So I thought to myself, how do I fix that? How do I stop myself from making these mistakes? And that's where technical analysis comes in. That's why I learned it. That's why I emphasize teaching it to other people as well. It just removes that emotion and stops you from making all the mistakes that every other retail investor makes, and gives you that edge in the markets. So if you can learn these things from a young age, even if you're a bit older, you can learn them at any time. You know, they're always going to give you more advantage in the markets than less. You always want to know more because you want to be knowledgeable and you want to be aware as an investor. So we're going to continue on here, taking a look at Bitcoin dominance. So the same thing breaking out here. This is just crazy bullish uptrend. That's why I'm not really interested in altcoins, because Bitcoin is just outperforming the altcoins. It has been for the longest time. Even though we saw Bitcoin dump to 74,000 in that major market flush, we saw it quickly reverse back into the 80s, offering those trade opportunities. Ethereum's going to be bleeding again. Obviously, we see it holding the lows here on the daily. That being said, it's not enough to be calling a bottom yet. Take a look at ETH. Bitcoin just continues in its downtrend. Same thing, we're not interested in buying this falling knife. We want to see it bottom. Again, the bottoms are not going to be V-shaped. We're going to have multiple opportunities to enter this chart. We'll look at the momentum indicator. So although it's quite oversold, you know, direction is pretty neutral here. So nothing too interesting in terms of Ethereum Bitcoin. Looking at total 3, looks a little bit better. It did get this bounce. So we've got a higher low. We don't have that higher yet, so we want higher high yet, so we want to see this high get taken out, keep that higher low structure. But for now, also same thing, no confirmation in terms of the high time frame, but we're getting a little bit more bullish momentum than ETH Bitcoin. So Ethereum definitely lagging some of the other large cap altcoins right now, that's for sure. Others dominance, kind of also getting that bit of a bullish cross here on the MACD, but our DMI kind of curling back over, so neutral-ish momentum on the DMI. RSI also in neutral territory, and we're kind of just stuck in this bearish price action pattern. So what we see here is we do have a level of support lower down here towards 5.5%. For now, this is that bearish flag breakdown back test, currently just rejecting. We need to see these lows hold, otherwise we do just continue that downwards price action. So not too interested. I don't want to get too far into much really, because of the way the charts are looking. Still a lot of volatility, still a lot of uncertainty. You know, that US 10-year still very elevated. So we're just going to keep following the macro, keep following the charts, and then we'll make our decisions when we have the data that warrants that kind of decision. So again, not rushing into anything, being patient, managing emotion, and executing on our strategy. Thank you so much for watching, guys, and I'll see you in the next one.